analysis for October the 5th. Once every few months you get a situation similar to the one that we are witnessing here, where out of nowhere, based on absolutely nothing, all of a sudden market goes into a completely destructive, manic push to the upside or to the downside. It all started on Friday, where out of the low, suddenly market realized that the fact that the economy is absolutely in a disgusting condition, the fact that every single other economy around the world is either slowing down or going into a recession, the fact that we only created 114 or 40,000 jobs in our own economy, somehow this was fabulous news. And suddenly every single item that was fundamentally negative for the market changed, and all the focus shifted again to the same crap, which are interest rates. And many articles came out that the Fed will no longer look to raise rates. Some article even came out that we will never ever see a rate hike again, not till end of 2016. And from that point on, a complete, total attack to the upside started. Now, I warned you that this kind of a vicious move to the upside usually also happen during the earnings season, where all the gambling money pours into the market, especially if it's an oversold market, in order to gamble for the earnings. And now if we look at where we are at from 1883 Friday, we are at 1980, and this is a 97 points move on the upside in a matter of 2 days, Friday and Monday, and it's all parabolic. This could not have been more of a devastation to anybody that even attempted any kind of a short today, including myself, to have had a chance of succeeding. There was only one single pullback, and that was during the C period. It came to 1960, and then from that point on it was just hell to the upside, with the average pullback of $1 to $1.50. What has changed? Absolutely nothing has changed. This market and the pigs of Wall Street, all that they look at and all that they care for is how much more of this easy money is available for them to gamble with. And the bad economy now is turning to become very good news. Now we are in a mode where every time that we are going to see a disgusting economic fundamental news being out, they're gonna cheer it and they're gonna buy it because it means no rate hike. And if my guess is right, there is a big possibility that based on the daily, we could absolutely go hit 2028, 2025 up there, and at which point we would have retraced tremendously a portion of this leg down. After that, when we do reach that level, which could definitely correspond to possibly end of this week, where we are going to start to get the earnings announced, and after the earnings announcement are done, I am expecting a full-blown massacre down. You cannot have a 97 points up like we just did without a pullback that was exceeding more than 10 points, meaning that you went up 100 points without retracing anything that exceeded 10 points. It is lunacy. It is madness. It is craziness. But you will not change the pigs of Wall Street. So now, tomorrow morning, if we do gap up, which I doubt that we will unless there is truly insanity in people's brain, if we do open with a gap up, I believe it will be the mother of all short opportunity, because we will be opening gap up in excess of 100 points rally in a matter of 2 sessions, Friday and Monday. On the upside, the first level of real resistance is that POC at 1986, and let's see if by tomorrow morning we have any stamina left into this market to take it up past that level. And if we come in tomorrow and we have not been able to pass through today's high, big possibility that we are going to at least attempt to retrace part of this 97 points of insanity on the upside. First level of support is the point of control at 1967.5. Second level of support is 1960. If we do break below 1960, then I'm expecting that we should definitely try to drop towards 1948.25, and then below that we have a POC at 42.5. So on the upside, for the time being, 1986. On the bigger time frame, 2020 to 2025, at which point I believe that level will be a horrendous level of resistance and a fabulous selling zone. But we are not there yet. But we may be getting towards that level by the end of the week, where everybody, every single soul out there will be then invested into the market ahead of this gambling season of earnings. Now for crude, it is starting to get a little bit troublesome here. Why? Because now this is the second attempt that we are trying to exit out of this triangle, even though that technically we have succeeded by closing out of the triangle, but volume shrinked and we were unable to break that level where previously the seller showed up at 47, almost even. So now, unless we come up and clear the 47 level with CL, we are now open for a correction here. And the first target to the downside is 45.85. The second target to the downside 45.10. And the third target to the downside 44.4. If we do clear above 47, 47.15, then there is really absolutely not much before we do hit 48. But this was not too good, because we attempted again to exit out of this high and we failed. Now let's look at gold. $11.29.5, extremely important support. As long as we are above it, we should exit up, hit the two POCs up there at 11.45.4 and 11.49.9. If we do break below 29.5, this whole range down here where you see the single A's will be attacked, and the first level of support will come in at 11.19, and then after that we will retrace entirely this zone and go towards 11.08. So that's it for today, and this was Reza with Profiletraders.com. An extraordinary day for ES and an extraordinary tough day to trade, because it was all day long forced buying and the whole sell side was completely, totally shut down for the whole day. Thank you for listening, and talk to you tomorrow.